Will investing in the Tata AIA Life Insurance Wealth Pro plan help you build wealth in the long run? Let us find out through an in-depth analysis in this video. Hi there, welcome back to holisticinvestment.in, where we help individual investors like you to make the right financial and investment decision to reach your financial goals in a more faster and smarter way. Now, before analyzing this policy, let us first understand what is this policy is about. So, this is a unit-linked individual life insurance savings plan. Some of the key features of the policy are: you can pay your premium payment as per your convenience, like single or limited pay, and you can also choose to receive your regular loyalty additions to boost your investments. And for enhanced investment opportunities, you have a choice of 25 fund options. You have the option to customize your plan with a range of riders, and you have various investment strategies like enhanced systematic money allocation and regular transfer investment portfolio strategy. So these are some of the features of this policy, and there are benefits like maturity benefit, death benefit, loyalty additions, and you have an option of choosing from 25 investment fund options, or you can choose the portfolio strategy, which is the enhanced systematic money allocation and regular transfer strategy. According to your risk tolerance and investment goals, you can choose either of that. And also, as this is a unit linked policy, this policy also charges you with multiple charges. So your premium is invested after the deduction of these charges only. So this in turn will affect your yield. When other market related products have an inflation beating return, the charges under this ULIP makes them unattractive among their competitors. So now, if you want to know more about these aspects of the policy in detail, you can refer to the policy brochure. Now let us take a look at the advantages of this policy. So you have the option to choose from 25 funds, and there are top-up premiums which can help increase the value of your investment. The addition of loyalty will increase the fund's worth. The flexibility of additional coverage through riders are available, and there are no fees for switching funds, partial withdrawals, and premium redirection. And the smart method, which is the investment strategy, safeguards your entire investment from market volatility, and the settlement option under this policy can be exercised for maturity benefit. So these are some advantages of investing in this policy. However, the disadvantages are no liquidity during the lock-in period of 5 years. The loan option is also not available, and the premium will be invested in funds after deducting the charges. So these are some drawbacks that you need to keep in your mind before deciding to invest in this policy. Now, as we have a basic understanding of this policy, let us move on to the analysis part of the video, where we are going to conduct an IRR analysis by calculating the internal rate of return of this policy based on the benefit illustration given in the policy brochure. So for calculation purpose, let us assume that a 35-year-old male has purchased this policy with a sum assured of 50 lakhs with a policy term of 20 years and a premium paying term of 10 years. So the annualized premium he's going to pay is 5 lakhs. So the fund value at the end of 20 years is calculated based on the assumption that the fund earns a gross return of 8% or 4% at the best and worst case scenarios respectively. Please note that the actual returns can vary depending on the performance of the chosen fund option. So this is just for example calculations. Based on the return assumption of 4%, the IRR is 2.02% and the 8% return is 5.97%. Even in the best case scenario, the policy is not able to deliver a fixed instrument return. So the fund value at the end of 20 years is a pre-tax amount. The Finance Act 2021 introduced certain provisions through amendments to Section 1010D, and the applicability is from February 1, 2021. So the policy is issued on or after February 1, 2021, having a premium of 2.5 lakh or more for any of the previous years, then the amount received, including the bonus, at the time of maturity will be taxable. So the post-tax IRR will be even lower than what we see in the tabular column presented right now. So on the whole, this policy is not beneficial for the investor. So as this policy is not giving us a desirable outcome that we need, let us do a comparative analysis with a alternative strategy where we are going to invest in insurance and investment separately instead of investing in a bundled product like Tata AIA Life Insurance Wealth Pro plan, which combines insurance and investment under one single policy. So here let us assume for life cover purpose, we have opted for a sum assured of 50 lakhs in a pure term policy with a policy term of 20 years and a premium payment term of 10 years. All have similar metrics compared to Tata AIA policy for a fair comparison. But the annualized premium is 12,700 rupees compared to the original 5 lakh premium we paid in the Tata policy. So the total investment amount that we have available if you choose to deduct the original premium is 4,87,300 rupees. So you can choose to invest based on your risk tolerance. If you are an investor who's not willing to take any risk, then you can choose a debt instrument like PPF for investment, and those who have a long-term time frame to achieve their financial goals and are ready to take risk can opt for the ELSS mutual fund option. So the IRR under both scenarios is beneficial to you as it is greater than the inflation rate. So the IRR for the pure term plus PPF combo is 6.93%, and for the pure term plus ELSS combo it is 11.08%, which is calculated on the post-tax return. So if you have any doubts regarding how the ELSS tax is calculated, we do have a small tabular column presented on the screen for your easy reference for you to pause and see. So in the previous example of Tata AIA policy doesn't consider the tax on maturity proceeds. Finally, after analyzing the IRR and comparing it with another investment avenues like PPF or ELSS, we can see that this Tata AIA policy cannot help you in your wealth creation process compared to other alternatives we have seen now. So what is the final verdict? Is investing in the Tata AIA Life Insurance Wealth Pro plan worth it or not? An investment should always make your wealth keep pace with your financial dreams. This policy fails to fulfill your financial dreams by not generating an inflation-beating return for a policy term of 15 years. So as the plan is not lucrative in terms of return, the plan can't be a part of your investment portfolio. The reason behind this low return is that the charges under the plan and the tax exemption on maturity proceeds will not be applicable for policies exceeding the threshold of 2.5 lakh premium per annum. Alternative investment options which are beneficial for you are taking a combination of pure term insurance for life cover and investing your surplus for your life's financial goals. This option would be more lucrative in terms of return than an insurance cum investment product like Tata policy.
If you want to read more about this policy, then you can definitely check out the blog post we have posted on our website through the link in the description. And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to our YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.